Hello fellow traders. Today I'm going to show you how to use EDGAR the way institutional traders do. A while back we went over filings, so I figured that we'd do a revised session on it. Not as a compliance paperwork, but as an edge. We'll use Amazon's Q3 2025 earnings as a live example on how the 10Q, 10K, and 8K exhibit triggered a 9 to 13% move after hours. You'll learn how to find meaningful information in these filings and to use it to structure a trade. If you found value, share this with other like-minded traders and subscribe for more market edge alerts like this one. Let's get into it. Why EDGAR still matters. EDGAR gives direct access to corporate truth. It's faster and more reliable than summaries or analyst notes because it's the primary disclosure source. Anyone who can interpret this data, or the data tables quickly, can gain measurable head start on others. The 10K, 10Q, and 8K. The 10K is an annual foundation audited for financials, risk factors, executive commentary, and a multi-year data. 10Q is a quarterly update comparing progress to those long-term plans. And the 8K, with this flash signal, is fast news like earnings releases that spark immediate price moves. Think of it like zoom levels on a 10K. The 10K is the map, the 10Q is a quarterly checkpoint, and the 8K is an alert. And the 8K is where traders see the numbers first that can cause an instant repricing. Case study setup. The Amazon Q3 2025. I wanted to go over filings and how they affect certain stock moves. So Amazon put a filing on the 20th. And then the next day you see buyers stepped in. And so much so that it gapped up the next day and pretty much continued a $16 run from here to 238. So basically what happened there is they got excited about the news, buyers stepped in, as you can see with the volume, and carried it up. But in between that time, there's a lot of indecision. And if they're going to today, as of the 24th today, well not the 24th, but as of the 24th, you had a doji, and then going into the 26th of this trading day, you see that it's starting to form a hammer. Does that mean a reversal's coming? I don't know. But the important thing is that when you see these filings, we need to look at them, decipher what the good and bad is, and you can make a trade from it before the news. Amazon reported roughly $180 billion in Q3 2025 revenue, showing about a 13% year-over-year growth. EPS exceeded consensus by approximately 33%, while AWS growth accelerated to 20% after prior slowdowns. This combined fundamentals immediately shifted investor expectations. Revenue growth was good, but the real driver was profitability and AWS momentum. Those two variables beat expectations significantly, changing the entire narrative about Amazon's growth engine. Price reaction. 9 to 13% after hours. After the release, Amazon stock jumped between 9 and 13% in the after hours of trading, moving from the low 220s to roughly 242. The exact figure varies by data feed, but the reaction reflected a rapid repricing of forward earnings potential. Within minutes, the market adjusted to new expectations. It wasn't about the news hype. It was about the discounted cash flow, math meetings, plus better inputs. So what is a strong file? This is what a strong filing can do. What EDGAR told you first. The filings revealed broader margin gains, explicit AWS revenue, breakout data, and management commentary connecting to AI investment to a future capacity. These details painted a clear, bullish picture long before analysts summarized them. When you see a 10K or a 10Q and see them together, you instantly spot the AWS acceleration and CapEx narrative. Two core signals the crowd waits and hours to digest. Reading those narratives very quickly delivers actionable insight minutes ahead of others. From numbers to narrative. By identifying the surprise, strong EPS, and AWS growth, you reframe Amazon's story from slowing cloud to AI receleration. The appropriate expression then becomes a deliberate choice between stock for directional exposure or options for risk-defined leverage. Translating data into narrative is everything. Numbers only move prices when they change beliefs. Here, beliefs about AWS slowing died on one report. Trade, pre-earnings setup. Before the report, assume Amazon trades near 222. A trader expecting a positive AWS surprise might buy a 240 call or set a 230, 250 call spread, limiting risk to premium paid while positioning for a post-print rally towards 240 or beyond. This example uses defined risk leverage to play an expected positive earnings surprise. The thesis, AWS reacceleration drives sentiment, and that's exactly what happened. Numbers first, narrative next, execution always. Once the report landed on the stock and the stock reached 242, the 10Q confirmed sustained AWS momentum rather than a one-time pump or bump. Traders reviewed those filings and can see the potential for the continued upside and structure follow-through plays such as longer-dated bull call spreads or scaled equity entries. Each earnings event also demands structured risk control. Guiding, nuance, accounting adjustments, or implied volatility collapse can erode returns even on a correct call. Maintaining a dedicated filling calendar, opening the AK the moment of the day post, and reviewing the 10Q line items forms before the core of the traders' repeated edge. EDGAR approach in this way becomes a strategic tool rather than a legal archive. In the Amazon's case, it proves that a few pages of uploaded tables showing a 33% EPS beat and a 20% AWS growth can drive multi-day pricing. This Amazon example captures the full cycle: filing release, market surprise, trade idea, and structured risk. Practice this workflow in the calendar, and you'll anticipate rather than react. That's how professionals convert EDGAR access into advantage. Now remember that EDGAR is the market's first unfiltered look at reality. Buried in those filings are signals analysts and headlines will echo days later. If you consistently read, interpret, and act on those signals with discipline, you'll turn raw data into informed trades and bureaucracy into opportunity. Thanks again.